This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachordis. Thanks for joining us at XM.com. The U.S. Central Bank rode to the rescue once again on Thursday, rolling out a gigantic $2.3 trillion lending package to help smaller and medium-sized businesses as well as local governments to weather the coming recession. The Fed said it would offer cheap loans to companies of up to 10,000 employees in perhaps the most powerful step so far in the battle against the economic crisis sparked by the pandemic. Stock markets cheered, with the S&P 500 recouping early losses to close 1.45% higher, as the stimulus will help negate some of the pain on corporate America and possibly make for a shallower recession. It could also allow some bigger firms to allocate more funds towards buybacks. Alas, it's difficult to have any real faith in this recovery. We are still in the early days of a recession, and while yesterday's Fed news were enough to eclipse another eye-watering U.S. jobless claims number, the amount and speed at which jobs are being lost is simply staggering. In the last 3 weeks alone, almost 17 million Americans have filed for unemployment benefits, amounting to more than 10% of the entire workforce, and rising despite a tsunami of stimulus. The greenback was naturally the biggest casualty of the latest round of stimulus, falling across the board as U.S. Treasury yields declined, further eroding its interest rate advantage. Gold was the main beneficiary, as investors priced in an explosion in the Fed's balance sheet, on top of a rapidly exploding fiscal deficit and a highly uncertain economic backdrop. As expected, OPEC and Russia agreed to cut their production by 10 million barrels yesterday, but oil prices sold off in the aftermath as the deal disappointed in size and scope. In Euroland, the finance ministers finally reached an agreement on a €540 billion rescue package, though there was no breakthrough on the issue of Eurobonds. Finally, it's a holiday almost everywhere today, so liquidity will be thinner than usual, making sharp market moves possible without much news. This was today's Daily Market Comment. Thanks for joining us at XM.com.